Joining us right now is Lipow Oil Associate President Andy Lipow. Andy, good to see you. These numbers are just coming out. What's your take on the oil numbers?
Well, it's very surprising for ExxonMobil because they should be a big beneficiary of the higher oil prices as well as better refining margins in the first quarter. So, frankly, I was looking for Exxon to beat, but that, in fact, is not the case.
What's driving the earnings story or the quarter at this point for Exxon?
Well, I think, they still need to get their costs under control. They had an issue in Papua New Guinea with their liquefied natural gas plant. That's probably dragged them down. And we're also seeing some pressure on the petrochemical business as significant expansion capacity has come online, pressuring some of those prices.
Now, are you surprised at the resilience in the price of oil, given the fact that the U.S. shale frackers are pumping out so much oil? I mean, we've never produced as much oil since 1975 here in the United States, yet we're still seeing oil go to $70 a barrel. What do you make of that?
Well, I'm quite constructive on the oil front, and as you point out, U.S. oil production is going to hit an all-time record here in 2018. But the fact is that world oil demand continues to grow. We see the International Energy Agency continue to increase its forecasts of growth to about 1.5 million barrels a day this year, and that's expected over the next couple of years. When you combine that with geopolitical risks such as Venezuela's continued decline in production, as well as some missiles flying over Saudi Arabia, the oil price is constructive.
Well, by the way, the revenue is beating expectations on Exxon. It's at $68.21 billion for revenue in the quarter. That was a beat, but the earnings seem like a miss because that's $1.09 versus an estimate of $1.12. Nonetheless, Brian Brimberg, the stock is down about 2% right now.
Yeah, Andy, can you talk a little bit more about Venezuela? You brought that up a second ago. Kevin's wondering, how with the Permian Basin pumping out so much, are we seeing the prices high? But really, this has been a story of Venezuela in terms of global markets. Do you see that story getting worse in the year ahead and propping up prices more?
Well, I do. In fact, I expect that Venezuelan production is going to continue to decline. They're plagued by lack of workers leaving the job. Of course, there's not been investment in the oil fields. They have electricity problems that continue to plague the industry. And with no power, you're not going to get the oil out of the ground. In fact, the Venezuelans are so tied in with the Chinese and Russians who have been lending them significant amount of money that even the Chinese and Russians are no longer willing to invest in their refining system. They'd rather just see the entire place be mothballed.
Andy, it's Dagan McDowell, but talk about global demand. Does the demand numbers that you're seeing, particularly here in the United States, does that indicate, since we're getting GDP out at the bottom of the hour, indicate a strong economy here in the U.S.?
Well, it certainly does, especially with gasoline demand. I expect gasoline demand to be at or near a record this year as more people are working, and if more people are working, they're going to be driving. On the diesel front, which is really indicative of industrial demand, we're seeing diesel demand go up. Of course, that's reflected in more trucking and railroads. Jet fuel demand is hitting an all-time record as people are flying all over the place. And in fact, last week we saw the U.S. export a record amount of diesel fuel as well as crude oil to supply the rest of the world.
We had a pretty strong start for the year for oil companies. You had Anglo-Dutch giant Shell reporting its largest quarterly profit in 5 years yesterday. ConocoPhillips saw profits surge 52%. Is it your estimation that given the supply side of the market, that oil prices go lower because the U.S. is going to be supplying so much more to the global market? Or do you think that we stay at these elevated levels and go higher from here?
I think that we're going to go higher. In fact, I expect to see WTI at $73 a barrel. And while it's true that we're very focused on the Permian Basin as well as the Bakken and all the oil coming out of the ground, the fact is in the rest of the world, they're looking for our types of oil. And as a result, I expect to see record oil exports out of the U.S. to supply markets in Asia as well as Europe. It's really surprising how much oil Europe is taking. It's up to about 500,000 barrels a day of U.S. oil now.
Should we be focusing on the oil producers and looking at, Jeff Gumlick was at the Sohn conference and said to buy XOP and stay away from the big integrateds like the ExxonMobil that we're reporting on this morning? Is that the way to play this rise in demand and rising price that you're talking about?
Yeah, it certainly is. I mean, the pure play producers, especially in the Permian Basin, would be a way to play rising WTI prices. So you have a number of companies there like Concho, Occidental, and a number of others.
Andy, talk a little bit about the infrastructure problems down by the Permian Basin. I mean, one of the issues here is actually getting oil out of there, to the markets it needs to go to, but they're having trouble with pipelines, with workers. What's going on there, and do you see that problem resolving itself?
Well, first, the biggest issue in the oil industry is the lack of pipeline space. We've built a number of new pipelines, but they've rapidly filled up out of the Permian Basin to the Houston area. And in fact, there really is no relief on that front until later in 2019, when companies like Plains and Phillips 66 commissioned brand new huge pipelines to move that oil to market. So that's one problem that's plaguing the producers.
If you're expecting oil to go much higher, I mean, is that going to be an issue for the economy?
Well, it certainly is, because gasoline prices nationally are over $2.80 a gallon. They're headed to $2.90, and I think you get consumer resistance at $3 a gallon, so that is certainly going to be concerned. Certainly the rising diesel prices affects moving, say, agricultural goods to market, moving other goods and services to the mall, so the consumer is going to be paying more. And that, of course, is a concern that it could dampen economic growth.
Are you worried at all? I'm looking deeper into these ExxonMobil earnings right now. They are actually missing on the production side. Is this a concern that we should be looking at when it comes to these big integrateds? I mean, they completely missed. They were expected to have 10.5. They only got 10.01 on the production side of millions of barrels of oil. So what do you think in that regard?
Well, that certainly would be concern, and I'd have to really look into it a little bit deeper to see where did they miss. Was it in the Permian Basin or in North America, or were they affected overseas in some of the other areas that they're exploring in? But it would be a concern, especially when we focus in on North America, where the drilling efficiency has grown and gotten better, and that's enabled a company like ConocoPhillips to beat its expectations.
All right, we'll leave it there. Andy, good to see you. Thanks so much.
Thanks for having me.
Andy Lipow joining us there.